Now let's welcome in our next guest. We have Kaustubh Pawaskar, research analyst at Sharekhan, joining us to talk about what's happening in the FMCG space. Kaustubh, thanks for being with us at NDTV Profit. ITC came out with earnings which were slightly better than what the street was expecting, especially on the cigarette side of business. How are you viewing the earnings of ITC?
ITC's numbers were slightly lower than what we and street were expecting, but the volume growth of about 4% in the core cigarette business was in line with what we were expecting for the quarter. So if you see in quarter one, the volume growth was about 3%, and in this quarter it came to about 4%. So that gives us an indication that now cigarette volumes are getting stabilized in the domestic market. And for the entire year, we could see 3 to 4% volume growth if there are no regulatory concerns, coming up in next 6 months. So if there are no further price hikes in the portfolio, we might see volume growth improving in quarter to come for the core cigarette business. Also, one of the key positive in the numbers was the performance of the non-cigarette FMCG business, where growth has been improving for past 2 quarters. So last quarter it was about 8%. This quarter it has come up to about 13%. So the growth of the non-cigarette FMCG business has improved over the past few quarters, and that was another key point in the performance of ITC's business. Other segments, I think hotel Q2 is normally a weak quarter for the hotel business in India, so Q3, Q4 will give us the clear indication. Agribusiness, again, the performance was kind of a flat, and paper and paperboard packaging business, I think the business would improve once you see overall improvement in the cigarette business and the overall FMCG business of the company. So I think overall it was one of the better performance. We have broadly maintained our estimates, and we have a buy rating under stock with the price target of 280.
280 rupees. Okay. Do you think the concerns on the cigarette business, especially the price hikes that you mentioned because of increased taxation, is behind? Because the GST is coming through. Could come through starting early next year, and there's talk of a sin tax as well. So can we safely assume that those regulatory overwinds are gone? Those clouds have cleared, because there's a big question mark because of the GST.
Obviously, GST would be one of the major factor for the company, and the sin tax, obviously the rate it has to be decided. But if it is 40%, what we have been hearing on the street, if it is 40%, obviously the company has to take the price increases, and that will have an impact on the sales volume. So as I said, that any significant increase in the prices in the coming quarters would definitely have an impact on the volumes, but currently we are seeing that the sales volume are getting stabilized, and it might continue unless and until there are any significant price increase in the portfolio.
Right. Can you just talk about Dabur as well, and valuations of Dabur? It's almost similar to HUL.
See, Dabur is not under our active coverage, but if you see the performance for this quarter, the volume growth has moderated from 6 to 8%. It has moderated to 4%, and the revenue growth of 2.5%. So I think Q2 was one of the weakest quarter in terms of the volume growth for the Dabur. And obviously valuations is something which one has to look upon.
Right. As far as HUL is concerned, what do you make of the commentary? They said in the call very clearly that durable growth has picked up, and now they expect FMCG to pick up. But again, it's just an estimate.
Yeah. What we believe is that this could be kind of a bottom out for the FMCG space. The volumes have moderated in quarter 2, but things are expected to improve, considering the fact that monsoon has been noble. Also, the impact of the 7th pay commission would come into play. also the inflation is kind of stabilized in terms of the food and vegetable prices. So all these factors would come into play, but I'm not saying that it is going to happen in the immediate term. It will take another quarter or two. Maybe quarter four would give us the clear indication. But if there is a pickup in the rural demand, I think most of these FMCG companies who have better presence in the rural market would benefit. But yeah, maybe quarter three, end of quarter three or beginning of quarter four would give us the better picture.
Right. Let's talk about the Diwali picks at Sharekhan as well, and let's start with them one by one. What are your top conviction calls? Can you just tell us about that?
See, top conviction calls, I would prefer, we would in banking space, we like SBI and RBL. SBI mainly because it is one of the largest public sector bank, and if you compare the NPA, the NPAs of SBI is much better in comparison to some of the public sector bank, and the extension to the chairperson, Ms. Arundhati Bhattacharya, I think that would add wonder to the company, because it would further strengthen the SBI's position in the near term. RBL we like mainly because it is one of the strongest growing private sector bank, and its gross NPA position is less than 1%, which is much better in the private bank space. And new management on board would, I think, improve the core banking business of the company in the coming years. In B2C models, we like...
Kaustubh, let's just look at it one by one. Let's start with RBL Bank. You think there is still a lot of gain in terms of market share that RBL can do versus some of the other private banks and PSUs? That would be one of the key calls.
I think so, because the new management on board, I think it would improve both the core business, including the retail and the corporate business of the company, and it has definitely it will help it to improve the market share in the coming years.
Right. L&T Finance, the next one. We spoke to the management yesterday. They were sounding quite positive about implementation of their strategy. So the key call is that the strategy would be implemented what the management has laid out, and that will lead to re-rating.
I think the main strategy for the L&T Finance is to improve its business towards more of B2C model, and they have their three growth areas, that is retail, wholesale, and rural finance. I think those are the key focus areas for the company. Obviously, they have bring down their B2B loan portfolio from about 69% in FY 2011. So they have in FY 2011, now it has significantly come down. So the focus is more on the B2C model, and I think that will help L&T Finance to achieve good growth in the coming years.
Right. Some of the other picks from the non-financial space, can you talk to us about that, and then we can move ahead?
Yeah, RBL, SBI, and L&T Finance are some of the are one of three of the picks in our financial space. Key picks as I said, that in B2C model we like Kansai Nerolac, Wonderla Holidays, and Phenolix Cables. Kansai Nerolac mainly because we are expecting the paints sector to perform well in the coming years, as obviously the monsoon is the major play. Also the auto sector itself is building up, and Kansai Nerolac has a presence in the automobile paint space. So, and GST will the rollout of implementation of GST will play a major role for the paint companies, because the organized play is on a larger end in the paint space. So all these things would help Kansai Nerolac to build up its portfolio, also the build up its overall business in the coming years. And it is the second largest paint company in India, so that should help the company in terms of improving its penetration. Wonderla Holiday will like mainly because of its business model. It has a strong cash flows. It's a debt-free company. It is already one of the largest amusement park in South India. It has 3 parks already operational, one in Bangalore, one in Kerala, Kochi, which are already a cash-generating amusement parks for the company. Third one has recently come up in Hyderabad. So once we see the footfalls on all these parks improving, I think that would improve the overall business prospect of the Wonderla Holidays in the coming years. Also, it is planning to come up with another park in Chennai. So if more and more presence into South India, it has a first mover advantage. Also, in terms in comparison to the other weekend entertainment options, I think Wonderla is a value for money weekend entertainment option for weekend consumers in South India. Phenolics Cables is another company which we like, mainly because its core cable business is doing good. It is extremely doing good. Also, the optic fiber business is expected to do well. Recently, it has added three products into its portfolio, which is going to add substantially to its earnings in the coming years. So Phenolics Cable again is another idea we like. And in automobile space, we like TVS Motors and Rico Auto. TVS Motors mainly because it is one of the better play in the two-wheeler space. As I said that the rural consumption is expected to improve because of the better monsoons, and 7th pay commission would come into play. I think TVS Motor, because of its portfolio and new launches, would definitely get benefit of all these factors. And Rico Auto, its major clients are Maruti Suzuki, is one of its clients. So obviously it will get benefit because of the increase, in auto sales.
Thank you so much, Kaustubh, for giving us the Diwali picks and the view on the big FMCG numbers that were declared yesterday.